What's going on, everybody? Welcome to another episode of the Tech Guys Who Invest podcast, where each week we teach you how to invest wisely and safely. In this episode, we wanted to dedicate this episode to highlighting the realism of being an active investor. We want to be as transparent with you. That's why we started the podcast, to help educate you through the things that we're learning, but also through our experience. So we just want to share kind of like days in the life of active investors.
You hear a lot of stories on podcasts or on blogs, and a lot of them are pretty unrealistic or sensationalized, at least, and can sort of make you think you're not making as much progress as you should. I know I felt that way when I first started getting educated on investing and began my investing journey. I kept hearing these stories about, oh, the bartender went from 0 to 1,000 units in 8 months. And I was just thinking, what am I doing wrong here? Why is it taking me so long to just get like a rental house, And I think Kevin and I would really love to share a few things we've learned along the way like that, and a few other things as well. So that's what this is all about here. So to that one in particular, I'd love to talk about that for a sec. And Kevin, I don't know if you had a similar experience, but I was really listening to a lot of podcasts, and it just seemed like a lot of them are like, so-and-so was, just doing was a hairstylist who went from 0 to 500 doors in a year. And I was just thinking, how in the world are all of these people doing this?
Right. And I love marketing, and I think a lot of it is just that. Not to say that to undermine or dismiss the accomplishments of somebody. If they absolutely achieved it, then hey, more credit to you. But I think a lot of it is that marketing. It sounds good. It's a way to attract capital. That I went from this many doors to this many doors, and you feel like you're this big player because you have all these different units and all these different assets. And I personally, maybe it's my own baggage, if you will, that I can't help but there's that subconscious comparison. It's like, man, why aren't I there? Right. And you kind of feel, and that's the problem with social media too. And no matter, for me, I find myself at certain times, like I got to get off because it's doing nothing but making me feel like crap. I feel bad about myself. And like, now I'm frustrated. Now I'm angry. And now I'm analyzing notes and writing podcast episodes, just pissed off because I'm not where I want to be. And it makes investing, being in the space, it makes it kind of a love-hate relationship when you compare yourself to how what others are doing.
I think it's so important not to, and it's hard not to for people like me. I don't know why. I just tend to do that. Maybe most people do, or maybe not. But a couple things that I would love our listeners to know. One is, this is hard work, especially if you're going an active route. And a lot of the people who try to make it seem like it's not as hard as it is, they've got something to sell along the way, right? Like some kind of program, a training, or some material. And a lot of them also know that once people discover how difficult it is to be an active investor, many of them will just kind of fall on the wayside, but they've already bought their course or their program, right? So don't get discouraged. If active investing is where you're headed and you feel like you're not making as quick of progress as all of those you hear about, don't get discouraged.
Yeah.
And keep going, right? That's
Absolutely.
the other thing.
Yeah. It's, sorry, I didn't mean to interrupt you there. I was thinking that when you hear other people's stories, you can think about how they're doing things, and maybe there's a certain system they're using or a certain habit that you're like, oh, maybe I should try that and implement that. That's not to say that if you do that, you will be successful, but it gives you ideas that you can help improve yourself. For on the active side, it feels like it's nonstop, and it feels like there's always something to do. And I know that this is just the short term, because with the way we're buying assets, Adam, I feel that it's like a sprint. I feel like we're sprinting, although it feels like it's also a marathon. Um, but I think the marathon gets easier as you continue to progress, because for a number of reasons, you start to understand how to develop systems. You start to understand how you can explain what it is you're doing. That way you can teach somebody else, and that way you can move yourself, your skill set, your value to something else. The podcast, for example, you and I producing the podcast, it's it is something we enjoy. Podcasting is something we enjoy, but the production, the show notes, the social media posts, all of that just takes time. And if you're active or you're passive, the one thing that you have in common is you have the same amount of time in the day. So it's about asking yourself what it is you want to be. Do you want to be the active investor that's constantly networking, taking phone calls at 8 p.m. at night, that's constantly looking at deals, trying to learn, Googling something that you realize, oh, I don't know this. I need to learn this, figuring out who you want to be mentored by, or you can be passive. And there's nothing wrong with being a passive investor at all.
No, there's not at all. Being an active investor is growing a business, and you really need to look at it like that. Just like any other business you're growing, it takes a lot of time to get it moving and get it off the ground and getting it pushed forward. A lot of the things you mentioned around creating systems and what you learn once you get moving are things that have to happen, and they just take time to develop. And you don't even know what systems need to be created or what techniques to use when you're first getting started. So there's a tremendous amount of effort that's spent building that up and learning that. And that's what I would want people who are taking the active route to know is it's going to take a lot of effort up front, just like starting a business would. And I couldn't agree with you more about the passive side of things. That's a phenomenal way to build wealth. And a lot of people, a lot of the wealthiest people are passive investors. They invest in other people's deals and put their money to work for them. And a lot of active investors want to be passive investors one day. They're
Absolutely.
hustling now to build their wealth so they can invest passively in deals.
Yes, 100%. You can really remove yourself from the passive when you're in a passive side, because that's why you're a passive investor. You don't want to have to do all the stuff such as negotiating with the seller, or shaking hands and kissing babies, doing all that stuff. That's not what you want to do. Let's say you enjoy your 9 to 5. You genuinely enjoy it. You have hobbies outside of work and trying to build wealth. Well, then use the money that you've earned, live below your means, to then get that to build wealth for you. So uh, that is absolutely a viable option. And like you said earlier, if you're thinking about being active, um, it takes time. And I think the biggest thing that I'm still learning is to focus on one thing. Make whatever it is that one thing, and just focus on that till it's done. Setting up the podcast, learning how to invest, or learning how to analyze a deal, whether notes, multifamily, single family, etc. Spend an hour a day. I think that's another thing too, is chunk away at it. Uh, that plus the consistency will give you the greatest amount of progress. The focus plus the consistency is better than just sprinting a bunch and then stopping, sprinting a bunch and stopping. Because there are times where I've felt burnt out, and I know, Adam, you've experienced this too, where you want to step away. You want to step away from technology, from social media, from looking. If I look at another note and do some calculation, I'm just gonna, throw my computer outside the window, right? You just kind of want to get away, and that's normal too.
Yeah, absolutely. And for me, it all comes back to getting really clear about your goals and what you want to do, right? I'm a big fan of designing your life and not just let it happen to you. So if you do that, you start with what are my goals and be really honest with yourself. What do you want the most and for the short, medium, and long term? And that will allow you to then decide what your investor identity is and whether that's passive or active. Choose the one that best aligns to those goals. And then you'll be so much happier. And then when you get into that state of mind where you do feel like you're getting burned out, you'll have kind of that North Star to guide you along.
Yeah, you got to be able to reset. And as part of that North Star, it's knowing your investor identity. Um, it might be that you try being an active investor and you realize this just isn't going to work. It might be more beneficial for you to work to get a higher paying job and then continue to live below your means so that you can take that money and invest it passively, right? But there's a lot of self-discovery that is involved with becoming an active investor, is what I realized. And by the way, Adam and I created an investor identity canvas to help you do just that. It really guides you on the path of figuring out, hey, is our mortgage notes my investor identity? Is multifamily my investor identity? If you want to learn more about that canvas, go to canvas.tgwipodcast.com. It's free. All you have to do is sign up, and you'll learn the value of knowing what to focus on because of a number of reasons, number of resources you have, the knowledge you have, the network. All of those things are considered when it comes to picking out your investor identity.
Yeah, we've had some feedback on that tool. People are really liking it to help them clarify what their investor identity should be. So we encourage you to go check it out if that's the stage you're in. Also, you can find other things on our website. So do check out tgwipodcast.com if you're interested in that. And we love feedback. So please let us know what you think.
Yeah, and another thing about being an active investor is you have to get used to not necessarily rejection in a way. What I mean by that is whether you're making offers on buying a rental property or making offers on a multifamily property or mortgage notes, you have to get used to saying no. Somebody's going to say no, whether it's they just don't want it, the price you're haggling with them with that fits your numbers. It's part of the game. But I do find myself like, man, I can't believe I lost out on that one. I can't believe I can't get it at this price. So you just move on, right? Uh, One thing that can be dangerous is, oh, I can make this deal work. Don't do that. Have your criteria, have the numbers set in stone. If the numbers make sense, do the deal. If you have to make the numbers work for the deal, personally, I don't think that's a good deal. So if you have, for example, my criteria for note investing is um, no more than, like 80% investment to value, meaning the price of the property, I wouldn't pay, I need at least 20% equity with the sales price of that note. So if somebody's asking for 90% ITV, I walk away. You have to be that simple. You can't say, well, this could be a good note, because now you're starting to stretch your parameters. And that, in my opinion, that can be quite dangerous.
Yeah, you really have to stick to that. And it's tough. It took me a while to figure out. It was just part of my inexperience at the time, but it took me a while to figure out that a lot of things that older in educational investment material said wasn't working in today's environment. It was kind of outdated for where we were in the market cycle. I didn't quite realize that. So I was like having all this trouble figuring out why I just could not find deals and none of them worked. Well, in retrospect, it was a good thing because there are not a lot of deals out there. And the people who are finding them are these people who have systems in place and there's mature networks in place and their teams in place. They've got resources that I didn't have as a brand new investor. So that's why what I was finding weren't good deals. It actually saved me that I stuck to my criteria. What was confusing to me and frustrating is that I could not seem to find deals when others did.
Yes.
I didn't know.
That is a big one, right? Back to that. Oh, somebody else, like, why are they doing this deal? And you have to remember that if that deal doesn't work for you, that's why you walked away, right? And it's hard to remember that. Like, how are you able to do this? And whatever it may be, maybe the criteria is different. I don't know. Maybe they have a higher risk tolerance, whatever the case may be. Just sticking to your guns in that respect of, this is how I'm going to do business and only do it that way. Because why change it? You subject yourself to increase in risk if you're operating outside of your comfort zone in that realm. I think another thing for me is having the right network of mentors. Because when I was talking about, you start to see deals like, oh, maybe I can make this work. And then I pose that to my mentor and say, hey, do I have rose colored glasses on by looking at this the way I'm looking at this? And I've a number of times he said, yes, this is a bad deal for X, Y, and Z. And intuitively, I'm like, oh, yeah, I saw that, but I didn't really think about it because I wanted to do a deal so badly. That's something that I've learned to let go of. Don't just do a deal to do a deal because other people are doing deals. Do a deal because it makes sense, because the numbers work itself out. We're in this for the long haul. It's not a get rich quick thing.
I think the advice about don't just do a deal because you get impatient is probably some of the best advice we could give to new investors. Everyone's found themselves in that spot where you feel like I have this urgency to get one done. I just need to get a deal done. You don't, right? You need to get a good deal done. You have to stick to your criteria. Do not do it because you have this emotional sense of I need to get a deal done, or I don't want to let someone down. Like I've been bugging this broker or wholesaler or whoever it
Yes.
is, and I'm afraid I'm going to kind of disappoint them if I keep rejecting deals they send me. Things like that are just a way to get yourself in trouble. So don't do it. Don't do a deal for the wrong reason.
I love that. When you said you feel like you're letting somebody else down, you're letting the seller down. The seller doesn't care, right? Of
Right.
course, they have a motive to sell you this particular product, whatever it may be, but
Right.
don't force yourself because you quote unquote feel bad for the seller. And that's something that probably you have to work through. But think about yourself, right? You're doing this to take care of yourself, not to make the seller happy.
A
So
lot of
just
people do it.
exactly.
It's
Um,
so scary.
yeah, it's terrifying. I think it's an important thing to recognize. So the real the being fully transparent here with being an active investor, it's not easy. It absolutely isn't. You have to enjoy it also, because if you hate analyzing real estate or you hate raising capital, whatever the case may be, don't jump into it because you think it's going to do you good as far as financial security, because it's going to suck if you hate it, right? You have to enjoy an aspect of it. And when you enjoy it, it makes it, I feel for me personally, when I enjoy what I'm doing, I'm in such a better flow. It becomes easier. Time flies. I'm able to just step in the right direction more naturally when I enjoy it. So that's something to
Yeah.
consider.
And that gets back to being really clear on your goals, knowing what you want and what it's going to take to make you happy. And if what Kevin said fits you and you don't think you would love it, then build your savings another way and then invest that passively in real estate. So find what you are passionate about and do what you do love to do with your time, and build your money up that way, and then invest that in real estate passively. You'll be much happier. Although if you're like me and Kevin and you just love this stuff and it is challenging and you like that challenge, then it's absolutely rewarding.
Yeah, when you get a deal done, when you know that you've followed all the criteria, you've done it right, there's something about it. It's like, yes, like I'm ready for the next one. I'm
Yeah,
hungry for more. You build a sense of momentum, and then you get that monthly paycheck, that cash flow. It's like, oh man, I can just repeat this process over and over again, and I will be financially free. Assets are going to pay for my time, or I will be making money regardless of what I'm doing, and that is a wonderful feeling. So you're right, Adam. That is probably the reward of being an active investor. It just feels so good when you knock one out of the park.
absolutely. So, whichever route you decide to go, or if you're just getting started and you have questions, Kevin and I love to help people out. We'll help you however we can, point you in the right direction of some resources or share some materials with you. Also, we already mentioned the Investor Canvas. Go check that out on tgwipodcast.com. And we'd love to hear from you. If you want to email us, techguyswhoinvest@gmail.com.
Thanks, everyone.